Everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account update. Today, my stock has made a loss of $1,385. The market focused on earnings and inflation data. U.S. corporate debt downgraded to junk status and is expected to be the highest since 2020. So let's first take a look at my account. Today, including the post market, I've made a total loss of $1,139.97. Right now, the net asset of my account is $72,740.85. Today, United Natural Gas made a loss of 4.90% to $6.99. Right now, it still shows a gain of 3.75% in my account. UVXY showed a loss of 0.27% to 3.76, and the SPXU showed a slight gain of 0.15% to 13.12, and the SQQQ made a slight gain of 0.17% to 30.07. The market closed mixed. Dow Jones Industrial Average closed down 0.27 to 3%, and Nasdaq Composite made a gain of 0.03%. And the S&P 500 showed a loss of 0.01%. Today, the healthcare industry and the auto industry showed a loss of more than 2%. On the other hand, the medical industry showed a gain of 3.62%. Wall Street's closed mixed on Wednesday. Investors continue to review the latest earnings report from Netflix and Morgan Stanley. The UK CPI rose more than 10% in February from a year earlier, indicating a sticky global inflation situation. The Fed's Beige book said overall price levels remained on a moderate rise. Wages have shown some moderation, but remain high, the report said. Some regions reported lower demand for cyclical wage increases compared to last year, with job growth slowing and the labor market tightening. Expectations for future economic growth remain largely unchanged. The Beige Book report said the CPI rose because demand is still rising. Corporate earnings remain the focus of the market. Streaming giant Netflix delayed plans to tap harder on password sharing. The company beat analyst earnings per share in the latest quarter but missed the revenue estimates. In addition, the company added 1.75 million subscribers last quarter, beating Wall Street's expectations. Morgan Stanley became the last biggest bank to report earnings, while the Wall Street giant reported better than expected results. Total deposits in the first quarter was $347.52 billion, lower than expected. Investors have been watching on big banks closely after the bank collapse last month. Electric car maker Tesla has cut the price of some Model Y version in the U.S. for 6 times this year. Markets continue to focus on Fed's monetary policy outlook. On Tuesday, St. Louis Fed President James Bullard said the recent recession fears have faded and tend to support the Fed's continued interest rate hikes. Atlanta Fed President David Bostic said on Tuesday that he expects the Fed to raise interest rates once again, then pause and assess the economic impact of policy tightening. In an interview, he said, "Another action should be enough to take us back, to see how our policies will work in the economy, and to understand how much inflation is back to our target level." The swap trade reflects that the Fed will raise interest rates by 25 basis points in May and will start cutting rates in July. Despite hawkish comments from Fed officials, the CBOE Volatility Index remains at its lowest level since January 2022, below 17. Bank of America's GFSI Market Risk Index, a measure of global asset volatility, is near its lowest level since February 2022. On Wednesday's overseas economic data, the Office of National Statistics reported on Wednesday that the Consumer Price Index rose 10.1% from a year earlier, slightly lower than February's 10.4% year-on-year. The core CPI, excluding factors such as food and energy, rose to 6.2% year-on-year, unchanged from February. U.S. corporate debt downgraded to junk status. U.S. corporate bonds downgraded to junk status by rated companies are reaching the highest level since 2020. This has further pushed up funding costs for some companies as the economy slows. In the first quarter, the $11.4 billion of bond were downgraded to the junk level, or about 60% of the total for 2022. According to its research, according to the bank's forecast, the year is expected to be the highest since the outbreak triggered the downgrade wave in 2020. The recent downgrade reflects the pressure in many companies face as the Fed raises interest rates and at the fastest pace in decades. Borrowing costs are up across the board, but companies whose bond ratings are downgraded to junk status will face higher costs because of a smaller range of investors eligible to invest their bonds. Barclays expects the rate of downgrades to junk rating accelerated in the second half as the slowing economic growth puts even more pressure on blue-chip borrowers. The bank expects such securities, known as fallen angels, to be worth between $60 billion and $80 billion this year, according to a report released by strategist Dominic Tumblan et al. All downgrade from investment grade to high yield means a deterioration in the company's credit standing, Tumblan said in a phone interview. The question is this the case for individual companies, or has it become a broader theme? The bank study bonds that no longer meet the high-rated Bloomberg U.S. corporate bond index. For corporate bonds with 3 ratings, that means they have at least 2 high-yield grade ratings. Barclays says that even if more companies are downgraded to junk grade, more and more bonds could be raised to investment grade. The bank expects such upstarts to be between $60 billion and $70 billion this year, the highest level since on record. The bank said the pace of such upgrades could slow in the second half. The largest share of fallen angel list is Nissan's $9.8 billion in debt. Nissan did not report to request for comments. But the list also included 2 regional banks, the First Republic Bank and Axis Financial. The 2 companies could not be immediately reached for comment. While the total dollar volume for the fallen angel is rising, the downgrades remain relatively modest. Barclays expects the $60 billion to $80 billion downgrade to be about 2.2% of BBB corporate bonds. The bank said the average since 2000 is close to 6.6%. That's all I have for today. Thank you for listening. Don't forget to subscribe and like the next episode.